Hey guys, J6.4 here, not financial advice. And today I have a question for you. Can a $400 Forex robot that you can buy commercially outperform a $7,000 algorithmic trader? So this is what we're going to do. We're going to compare two very different offers. One high ticket called EFX Algo, EFX Algo, and we're going to go to their website, and another budget friendly option called Dark Algo, and you can find that on the MQL5 website. So I'm going to walk you through a couple of things, how I use my own due diligence process, different websites, reviews, performance data, and then we'll lay them side by side, and you can decide if spending thousands always buys you better results. You're going to be surprised. So if you're into copy trading, if you're into automation, if you're into robots, or just want to avoid getting ripped off by flashy marketing, this may be the video for you. Let's dive in. All right, guys, let's go ahead and check out the EFX Algo first. On their website, they position themselves as the 100% hands-free trading algorithm with claims like a 75%, I'm sorry, it was 71% win rate and market beating returns, removing the learning curve. But before that, I can go into all of this and get excited, it has to answer these questions for me. Right now, what is the upfront cost? And I've seen roughly, because I hadn't talked to them directly, I need to be fully transparent, roughly $7,000 to get started. That's just to license the software itself, the algorithm, the robot, and then it's like $97 a month going forward. Now that could change. So this is, I guess on YouTube you have to say allegedly. Well, this is what I've heard, and I'll show you where I got that information as well. And then I always look at what are they promising, and they're really not promising. This is not a scam. I have to tell you that about these guys. As a matter of fact, if I had X amount of dollars to play around with, and I was a total novice, I would have considered it. Now I don't know. You tell me if you will consider it once you see the comparison. How do they back it up? Is there any third party audits? Do we get to look at some of these accounts? I tell you guys all the time that you always can have third party audits, or you can have what they call um, investor passwords, where you can actually go into the accounts themselves and then track whatever their gains or um, peaks, valleys, lows, highs, whatever. And of course, do they show the drawdowns and full performance history? Those are the things that are important to me. So let's take a look at a few other things here. Obviously, a lot of people love them. So just think about that, guys. If it is $7,000 and $97 a month, they're not doing too bad as far as their business side. Now, here's the deal. I was watching some of these claims, some of these testimonials. When you see 13%, $100,000 in 3 months, they're leaving a lot out. We don't know when that period was. They're not going to brag on bad periods. If you've been trading at any period of time, you know that nothing works 100% of the time. You're going to have times where there's going to be blown type of accounts, problems, even things that are no fault of the robot or the algorithm. It can be broker. It can be a crazy market movement like Trump announcing another tariff, another liberation day. I think that's what we call a liberation day, right? Again, I want to say all this is cool, but we've got to move on from that. That's great. I don't think they're going to put anything on their website that said, yeah, here's the month that we sucked. So, where do I go to next in my due diligence? One of my favorite places, of course, is TrustPilot, and TrustPilot has a lot to say. They have 416 reviews. Here you see it, and 90, looks like 90% of them are like 5-star reviews. That's nothing to sneeze at. But remember, whenever you're talking any kind of trading program, trading robot, it's good when it's good, but when it's bad, it's bad. Now, why do I go straight to the 1-star reviews? There's a reason for that. And it's not because I'm super negative. I just want to know, can I take some of these reviews? Just one of the first 1-star reviews we just ran into, and this one was 3 days ago, as you can see here. and they have some major issues with communications. They're pissed about the sales process, sales lies, no communications, and funds disappearing. The funds disappearing really shouldn't have anything to do with EFX, but we'll go on. See, my account should have never gotten over 10% drawdown according to the sales hype. That's the problem, according to the sales hype. You never know when something's going to go into drawdown, and then, of course, what sort of protections did you have in place? But now it's 42% drawdown. For those of you that are rookies, if you have $100,000 account, let's just go with a $10,000 account. If you have a $10,000 account, now you're going to see it draw down to around $6,000. So $4,000 is going to be the drawdown on that. So they don't like that at all. Let's see, my contact no longer responds. The Circle app that we're supposed to use for communication gets no answer. So yeah, people tend to disappear. That happens. And there's no response from the company. Then this one says the bot has been dead since April. That was 5 days ago. And I'm just saying this is just a drawdown period. I'm not saying that this is a bad bot. This is a bad time. And again, nothing performs 100% of the time. Now this person right here went into detail. Gravy disappointed 55. This is a rough year. This is a rough year. That happens. Account SNL 8%. The affect their 90-day trial. Now with this 90-day trial, I don't know if if they if they're putting in the 30,000. Now this is what I've heard. Take this with a grain of salt. They say it's around $7,000 to $8,000 for the robot itself, $97 a month to continue the service with this. Recommended, and you'll see this recommended balance. I think that they starting balance is around $30,000. So you've put $7,000 out, $97 a month, and $30,000 at risk. Anything that you put in a broker is at risk. So there's no doubt. Oh, and the cool thing about it is this person was in detail quite a bit. And I love this. They're not a scam. EFX actually did a reply. Their ongoing optimization, transparency is important. We're committed to improving the system efficiency and remain available at support to discuss your setup and feedback farther. So, they're doing what you should be doing, but again, I think the number one thing that you should do when you take someone's money is help them manage their expectations, especially if they're newbies. Because if you're saying that, you're going to expect a 10% drawdown, in other words, you have $10,000 in there, you shouldn't see your account go any lower than $9,000 before it recovers. You've got to help people, especially beginners, manage their expectations. So all these are pretty recent. Look at this, September 29th, and guys, right now it's the first of November right now. So ending this out, this is about a month ago. Let's keep going and see they're answering most of it. I stay away. No, don't. Yeah, stay away if you don't know what you're doing, if you don't know what to look for, if you don't know how to protect yourself. 100%. Oh, here it is right here. This person actually says January 25th they started, had decent returns the first 2 months with a $30,000 initial investment. Since then, my account is regularly in drawdown and becomes more negative every day. $97 monthly fee. So there you go. According to this participant or describer, my information is right on point. But I don't have, again, personal experience with them. And their replies don't seem to reject any of that information or counter any of it. Okay, so can we prove any of this? Let's take a look at our next step in due diligence. All right, guys, here we go. The next step is always, for me at least, I say, do I know anyone else that's using this particular EA or this service? So I'll do a search in MyFXBook. And true enough, with this one, there are plenty of people that are enrolled, especially when they say 12,000 people. So you're going to find some people who are going to track it on MyFXBook. This happens to be this person, at least he says that it's uh, EFX. So we'll see. And it's real money is in Ox Securities. That's one of our brokers that we use as well. I use this broker only because I've seen a lot of people put a lot of money there, even though I'll never put over 10,000 in there because it is an offshore broker, which is not going to be regulated under the U.S. Regulations. But I digress. This one started March 6, 24, and this is all the way up to today. As you can see, it says that is 51% gain from March to here. Now remember, guys, they put how much in there? 30,000. So you have a 36% absolute gain. What that means is that is based on the deposited amount. So you'll see these things where they withdrew um, money, and they would add money in when you see the little green ones here. But they only added, well, they only withdrew one time. So that's why you have to have the absolute gain because that's going to apply to the initial investment. Uh, you know what, guys? I am so sorry. I thought this was a $30,000 one, but they actually had close to 100,000 in this one. Let's see here. Yeah, no, yeah, because the balance, so they deposited 95,000. Okay, sorry about that, guys, but you'll get to see the flow of this. The red line on top, that is the balance. The the line on the bottom, the gold one, that's equity balance. Now, what this simply means is th these aren't closed right now. If they close out the trades right here, it says the balance, you have 51% growth, and you'll see the balance here is $125,000, right? So that's where we are. Now, you see when they say there's a lot of drawdown, this is the real money. If you were to close everything right now, it wouldn't be a 54% gain. It would be a 17% gain because you have a lot of floating losses going on right now. So if you were to close everything out, it would only be a 17% gain. Now, again, this is nothing to sneeze at, but it's just a little bit below some of the expectations that they had set for people. So here you go, guys. The balance is 125, and of course, the equity is 96,000. So therefore, there's a drawdown right there. So when you look at the deposits of 95, it made about $14,000. That was it. Um, so it's nowhere near we think where we thought it was going to be. Let's see. This is 2025. And you see 2%, 1%, 2%. This is nothing to sneeze at, but when it lost, this was down a little bit over 6% in April. April, if I'm not mistaken, but wasn't uh, Liberation Day in April. So that could have been that. And then you see a little bit less than 1%, 5%, on and on and on and on. All right. Now, how does that compare to, and it's going to be a little bit hard because I'm going to show you this in a back test, so this is not real money trading, but I would definitely evaluate this dark algo with back testing, but it has to be real data. So let's come back and let's see where they are. Now remember, this one is what, 46% it said, the absolute gain. Let's just see where that would be. And it wouldn't be that much if they were to close it off today. So let's see. Hey guys, I had to back it back up because you know one of my most important criteria is the drawdown, and the drawdown there is right at 30% for it to gain this, what, 13% or whatever, and that's, I mean, actual, and this right here, of course, is still up to 51 or 46 where it says absolute. All right, let's go back. I want to say this again, guys. There's nothing like real money trading, but this is the Dark Algo test, and we use uh, accurate up to 99.9% accurate data, which is variable, very variable spread. So it's pretty accurate, and you should get similar results, but Can't promise that because you never know what's going on with the brokerage and technology at any given time. But we do have the same days. It trades the euro dollar, and we have the same time period, which is March of 24 all the way to October of 25. Excuse me again. Now look at this. This is a $30,000 deposit, and we're looking at a $15,000 net profit. So therefore, it's a 50% profit on that. Now here's the cool thing that I told us we had to look at. The maximum drawdown on that was only 14%. Only 14%. So it seems to be a lot riskier. Now remember, this is the Dark Algo, which is a $400 algorithm. Okay, it wants to run on me. Okay, there we go. Those are my main things that I look for on it. And of course, I'm looking at this equity curve. It'll tell you what are some of the probable losses. It'll tell you about all the losses, how many, what percentage, the number, really good, the average loss trades. It tells you quite a bit. So there's a lot to take in whenever you're doing your back testing, when you're due diligence, something that you hadn't done before. So that's it. All of this is probability. So people have to decide after they become a little bit more knowledgeable and understand how to test these claims for yourself. As a matter of fact, we have a free reports, a free roadmap on how do you find these EAs, these robots, these traders that can help you grow small accounts into wealth and income. So head over to our Patreon group, download some of the free resources, and I should have something in there, and absolutely free. You don't even have to sign up. You just go straight to the link, find the link down there, and you can download that free report for yourself. Go out there and make some real money, guys. Until the next time, Jay's out.